Good morning, Sunday time, 10:07 a.m. Pacific Standard Time. Hopefully you set your clocks an hour ahead. 3/9/2014 weekly Google chart. One of the things that we're going to show in here is we can trade Google on using the call and put structure, because as we get closer to tomorrow will be a 5-day period in the options and the other. So basically on the monthly, let me just be very clear, on the monthly strike price of 322, that's the expiration date, is that we're right in half of the time period zone. So when you take a calendar month and you get right into the middle of it, this is where the prices change, and they have considerably. And Google can be traded by using a call or a put, and this is how you can trade a $1,200 stock. There's also one thing about the options that we need to be very clear about is the following, is that there are time differences. So once again, I'm going to just say it to my other guys, we are in the middle of the month of an expiration. We're starting that tomorrow. Now, here's what the chart, this is the full monthly March, and we're going to be pegging the 4/19 April, as it too will change just as what I'm talking about here on the expiration of being in the middle of the month of 3/22 now. So let's be clear that on a weekly level that Google is in a short-term phase. It's overbought. Every time that Google and Google is, it's really not the same stock anymore that it once was. This valuation is, in our view, a little bit higher, but here is a 10-week, and most importantly about this chart is the following, is that 50-week moving average, which is right up here, so we're just going to take this part of the year. The pink line is a 50-week moving average, and that moving average there is 967, but we're trading way up here. The 10-week, which is the blue line, appears to be at 1170. All right, this is what Google looks like. I'm going to draw a trend line here, and I'm going to come right across the high end of the bar of where this breakout bar was. Now I'm going to put another one over here where the high of this breakout bar was from the previous week. These two bars are key. Another thing, on every dip, you can tell by looking at that weekly 5-day wick that they're coming in on every dip with these longer term weekly moving average moving higher. Here is the 10-day, the 20-day, the 40-day. We are in a very good period where intraday, when we do have a reversal like we did, was a 4-day reversal, 20 simple day moving average popped like a rock. Not only that, 10-day is a major support level at 12.15. We close at 12.14.79. Now, by looking at this daily chart, we're going to go in now and do the put side. One of the things that we have working for us right now is we're looking at the 12.15 call that was in the money. Now, the calls were extremely inflated, and this is a March monthly call. It got all the way up here, and then it got all the way down here. So the calls were totally inflated here at the 12.15 call. Now, we're going to do the following. Based on the closing bell of Friday, we can see right here where these put options are really in our favor. And we're going to take a look at where the 12.15 put was 5 trading days ago. The high was $30, okay? That low on 3/3 was $23.73. Now, when we're taking a look at these lows in here, is that the low on 3/6 was $10.99 for that 12.15 put, which is a very good price to look at getting in, because Friday you opened at 1040 on the 12.15 put, you went to 1662. That was a $6 move. And then from 1662, the low never changed. It was at 1040. Now, that was extremely deflated. However, they closed at 14.6 on Friday. So come tomorrow morning, we're going to be on those two Pacific call. Here is the call that was totally inflated. They're never going to stay up here. And this is where that low is coming back down in here. That was a 5-day, so 1, 2 days. Then the next 3 that the calls of that 1215 contract, which was at the strike. Remember, Google's high was 1226 in here. So we're starting with the 1215 on both sides of the market. Here we have a $1,210 call on Google. We can see that the high was on 226, that they were at $31 a contract. This particular low where they dipped down to, well, that was on 3.3. And that low there was $13 for this mega stock with the 1210 call that was in the money. When we hit that Google share price of the equity itself down at the lower support level, we had a 4-day movement. So here's what the 5-day movement in the call was. High, $28. Low over here, 13. We rallied up within a 5-day range of it, and we made a high on the 1210 call at $25.20. Now, having said that, when Google got in its trading range on Friday, the high of this $1,210 call now was exactly $24. And let us not forget that the low was 16, and on a closing level of Friday, this contract closed at $17.20. Now, one thing about being a market maker in the option is you have to understand, and this is a call chart, you have to understand one common denominator called imbalances. Yes, you do. Now, on the flip side, here is the $1,200 put. And we're going to go back 5 days ago that put option on the high, they opened it at 1585. It went to 2362, and it ended up closing there at $19.68 there. Now, in the $5 5 daily range here, we can clearly see that this low, it was 6.25. They opened it at 9.50, and that intraday low was 6.25, and the close of that contract was $8.54, and the volume of that day was, the day volume was 388 contracts, and let it be known, prior to that there was no open interest at all. This is the minority side of the trade. That $1,200 put, that's why we're going over it. Once again, we'll give you a snapshot of the 1,200 call that's in the money. And of course, this put's been marked down to 625 here. So it's going to be very interesting on the bell. When we open tomorrow or in the morning in the pre-gap, we are going to take a look at which one of these two common denominators, what is going to happen with the 1210 call. That's the 1210 call with a $1,200 put. That's 10 handles difference. I just want people to see where that low is on that 1200. The 1210 call, well, it's come down, but let us also do the following. Let's just throw that, now where you've seen that call was, let's throw in that put option there. And this 1200 put, and we're just making sure that they match, which they do. So we know that that's 6 1/4. Both sides match. Here's the thing though, when we do throw in this $1,200 call that's in the money, we made the high on this one now. This is the opposite, it was $35.50 over here now. That was the high of that call, and they were super inflated. They're never going to stay up here, but they made a low in the $1,200 call at 1680 on 3.3. Yeah, we rallied up 5 days to a high, and let me just show you now. This high here was exactly $32. Now, let it be clear that this here is a call chart, and we do that. Most of you have never ever even seen one, but everybody loves to trade call or put options in the market, but don't even have a clue how to get a chart on the strike prices. So basically, what we're going to be watching here is this particular call is deep. Well, it's $14 in the money. So, because we close at 12.14 on Google, that's the $1,200 call with the 1,210, and of course the $1,200 put. We can clearly see that once again, this is the put where my pointer is. This is at 16 and or 6.25 on the low, and this one up here is still extremely in that overbought call of the 1,200 where we're going to come down. Right now, I'm pulling up the 1190 put on Google. The last pullback on that intraday low on Google and the stock itself was 1192. Now, we also are going to show the in the money 1190 call. So when Google had made that low, we peaked over here because when we were at that strike price, you have a strike price of $46 for the call, and that was inflated. So we also have a low of $22 on 3/3 of this 1190 call chart. Right over here, we had another high of $40 and a low of 36. Clearly on 3/7, which was Friday, this particular call opened up at 35.50, never went higher, and the low was 28.3, and yes, the open interest is only 72 contracts. Nobody's been involved in them because they don't know how to trade them. Otherwise, you would have higher volume. It's just that simple. We can trade Google now because the call and the put side are at attractive prices. Now, here we are going to do is we're going to take this particular put where Google had support. Now, I'm going to go back 3, 4. I'm going to go back right here at the high on 3/3. 1890 is that put option, and that was the high. But now the low was $4.44, and the last trading day of this is the open was $4.90, the high was $6, and the low was $4.55 with a closing level of 5.83 and a volume intraday was 229. Now, that open interest is not very much at all. One of the things that we will pull up here is, of course, we're going to show you the 1200 call right here. That open interest, 3200. Now, let's take a look at that once again, and this happens to be an April volume count. In April, right here at these strike prices. Those are the two biggest ones that we're currently looking at. Now, when we get up here, though, and I highlight that row on 322, what is it? $1,200 call. How many contracts? Open interest? We'll take a look. It has 9,023 of them, okay? And that total volume was 169, and historical volume in those, well, that's about 507 contracts. So this is the imbalances that we're trading on Google. Look, as we trade these intraday in the option pit, we are at a place in time in the price history of Google that we can move in and start trading these various strike prices. Once again, Google's in one of the best bull trends in the whole market. And boy, has that thing been working well. And once again, as we close this segment of it, here is the weekly recap. Look at these weekly moving averages are rising. And every time we hit one of these, this thing pops up and makes another high. It's traded very good for both mainly the bull and short term the bear gets a little piece of it, but not much. The bull is in control by 80% and the bear is about 20%. That is the ratio when trading the call and the put and the various strike prices.